Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Next-Gen Commerce and Supply Chain Limited Annual Report. China Next-Gen Commerce and Supply Chain Limited offers a diverse range of businesses and services, primarily focused on construction and property investment. At the core of its operations are construction services, which include civil engineering work such as road construction, earthworks, drainage systems, and soil improvement. The company also provides building construction services for industrial buildings, encompassing substructure work, piling, additions, alterations, electrical and mechanical installations. In addition to these core services, the company offers ancillary services including logistics and transportation of construction materials. Furthermore, it invests in and leases both residential and industrial properties, catering to a broad spectrum of clients, including government agencies and commercial corporations. This comprehensive suite of offerings positions China Next-Gen Commerce and Supply Chain Limited as a significant player in Singapore's construction and property investment sectors. The China Next-Gen stock price has skyrocketed in the past year due to several factors. One major contributor is the booming interest in China's AI sector, where individual companies have seen significant surges upon their public market debuts. For instance, More Threads and Meta X surged 500% and nearly 700% on their debut respectively, while Bayern jumped 80%. This trend indicates a growing demand for Chinese AI firms. Another factor is the overall performance of the broader Chinese market, which has seen a 35% increase over the past year. The Shanghai Stock Exchange, SSE, benchmark CSI 300 index rose 15% in 2024, with most gains occurring after September 24. This rally was attributed to government stimulus measures and improving investor sentiment. The increased interest from foreign investors, particularly U.S. investors, has also played a significant role. A report by Morgan Stanley found that over 90% of U.S. investors expressed a willingness to increase their exposure to Chinese stocks, especially in sectors like humanoid robotics, biotech, and new consumer companies. This is due to China's leadership in these areas and efforts to stabilize the economy. While there isn't a single China Next-Gen stock, with a sustained price increase of over 250% in the past year, individual company performances have contributed to the overall market growth. The combination of these factors has led to the significant surge in Chinese next-gen stocks. China Next-Gen Commerce and Supply Chain Limited market capitalization of $5 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that China Next-Gen Commerce and Supply Chain Limited holds a significant advantage in their industry. China Next-Gen Commerce and Supply Chain Limited trades at a higher price-to-book ratio of 31.26 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 61% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes, such as buybacks or dividends, rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of various factors. On the positive side, stronger progress in civil engineering works and a steady pipeline of infrastructure projects have contributed to revenue growth. Additionally, growth in construction services and increased property investment business have also driven revenue upwards. In terms of specific numbers, civil engineering work saw a 17.1% increase in revenue from 2024 to 2025. While rental income from property investments grew by 7.2%. Services revenue also experienced a 10.2% growth, with property investment revenue increasing by 7.3%. On the other hand, some areas have seen significant declines in revenue. For instance, building construction work saw a staggering minus 98.9% decline, while other ancillary services experienced a minus 75.3% drop. Revenue from civil engineering works also showed varying degrees of decline, depending on the duration of performance obligations. It is worth noting that there are some areas where no clear drivers of revenue growth or decline can be identified. In these cases, further analysis may be required to understand the underlying factors at play. The net income of the company experienced a mixed trend over the 2 periods under review. Initially, it showed an increase in net loss, rising from $0.8 million to $0.9 million on page 5. However, by page 10, there was a slight improvement with an increase of approximately $0.1 million. The profit margins also underwent changes during this period. The gross profit margin narrowed by 0.6% to around 8% on page 5 compared to the previous period. Furthermore, it decreased from 8.6% to 8% by page 10. Unfortunately, there is no explicit information provided regarding the net profit margin in any of the summaries. The company's ability to generate positive operating cash flow is a crucial indicator of its financial health. According to the provided data, there are instances where the company has achieved positive operating cash flow in certain years. In 2024 and 2025, the company reported positive operating cash flows of $3,143,901 and $68,124 respectively, page 91. Additionally, on page 92, it is mentioned that the company generated $1,433,419 in operating cash flow for 2025. Furthermore, on page 162, it is noted that the company experienced a positive operating cash flow due to net inflows of $1,187,917. While these instances suggest that the company can generate positive operating cash flow, it is essential to note that this is not a consistent trend. The data indicates that there are fluctuations in the company's ability to achieve positive operating cash flows from year to year. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, there has been a notable decrease in total bank overdrafts, borrowings, and lease liabilities from $18.6 million to $15.6 million. Non-current liabilities, specifically bank borrowings and lease liabilities, have also decreased by 7.5% and 32.2%, respectively. Furthermore, financial liabilities, debt, have decreased by 16.8% from $37,971,248 to $31,649,195. Interest expenses have also seen a decline, with interest on bank borrowings decreasing from $618,395 to $446,577. Interest on bank overdrafts has also decreased from $239,820 to $149,433. The company's total interest expenses for 2024 and 2025 are $8,348 and $7,150, respectively, indicating a decrease of 14.3%. However, it is worth noting that the interest expenses for 2025 have increased slightly from 2024, but remain relatively low compared to previous years. The performance of various segments and regions in the industry has been mixed, reflecting both positive and negative trends. In terms of good performance, civil engineering works have seen a significant increase of plus 16.8%, page 121. This is also mirrored in other ancillary services, which have experienced a notable growth of plus 24.6%, page 121. On the other hand, building construction works have struggled, with a substantial decline of minus 93.9%, page 121, indicating a significant downturn in this sector. Management's views on the company outlook and strategy are centered around several key areas. Firstly, they are optimistic about revenue growth, citing a 10.2% increase due to improved project progress and stronger demand for civil engineering services. In terms of investment strategy, management aims to diversify risk in the construction industry by establishing a portfolio of properties that provide alternative, stable, and recurring revenue streams. This move is expected to contribute to the company's long-term sustainability. Management also emphasizes its commitment to environmental management, with a focus on reducing the company's natural resource usage and minimizing its environmental impact. Specifically, they aim to maintain or reduce greenhouse gas intensity, construction waste, energy consumption, and water consumption by 2026. In addition to these initiatives, management prioritizes occupational health and safety, having established an occupational health and safety management system and achieved certifications. This demonstrates their dedication to creating a safe working culture for employees. Finally, management recognizes the importance of investing in staff development, equipping employees with future-ready skills and knowledge, and providing training opportunities to support business growth and sustainability. By focusing on these areas, the company is well-positioned for continued success and long-term growth. The company's financial history reveals a commitment to rewarding its shareholders through dividend payments. As per the official documentation on page 109, it is explicitly stated that the company engages in dividend distribution. This indicates that the company prioritizes returning value to its investors by providing them with a share of the profits. That concludes the financial summary for China NextGen Commerce and Supply Chain Limited. Feel free to comment below, and I will be happy to answer them when possible.